Kia ora everyone, it's Sam here from the Bailey's Insights team. Today I'm joined by Gerald Rundle, our National Director of Development Land. So how are you today, Gerald?
Yeah, very good. Thank you.
Good,
Yeah.
cool, awesome. So we've just released our New Zealand Development Land Market Update Report. So I thought we'd pull Gerald today to have a quick chit chat about what's going on in the development land market.
Excellent. Look forward to it.
Yeah, so if you kind of wanted to put it into a nutshell, how are the market conditions looking right now in the development land market?
I think we should look back a little bit. I mean, 2024 was a pretty tough year. We had high interest rates, we had a recession, and that really fed through into the market. Not a lot of retail activity in terms of residential sales, and we saw a pretty big build-up in stock, and that impacted on prices. And that really fed through to the development sector. If you're not selling houses, it's very hard to go out there and buy new land and develop them. So the market sort of slowed down and ground to a halt. So I think looking from what we're seeing in 2025, I think we're starting to see things easing a bit more. Yep, starting to come through. So tough 2024. I think we're looking a lot better in 2025.
Well, that's awesome to hear. And I guess what kind of trends are you seeing currently in the market and kind of transitioning into 2025?
Yeah, look, I think there's a few that are coming through. One of them is the greater interest in provincial areas. We're starting to see a lot of developers moving away from what I would call their traditional areas of activity, and starting to look down outside, particularly in the Golden Triangle, sort of Hamilton and Tauranga. But we're also starting to see parties moving out into Christchurch, Wanaka, and
is it just kind of limited space in the kind of more central areas filling up?
I think there's a few things that are driving that. I think one is because we're seeing growth in those provincial areas, and they're seeing that opportunity to get in there and develop and meet it. And I think there's some restrictions happening, particularly in the Auckland market, and I think there's opportunities that they see as to move out of the Auckland area. So certainly I think a move to provincial areas is a real trend. I think the other one is development contributions, really seeing a big increase in those, and councils have been looking for ways to find new revenue, and DC's are certainly one that's come up, so we're starting to see that those increases starting to come through.
And how is that kind of impacting the market on your end?
It's interesting that we're yet to really. Obviously developers are talking about it. It's going to be a bigger cost to them. It's going to feed through to them. There's advantages because it's going to give council more money to introduce infrastructure and upgrade it. But obviously there's a cost that they're going to have to deal with. So how they deal with that, is they're going to pass that on to the consumer, or is it going to come into the land values? There's probably going to be a combination of both.
Right. And I guess any other trends that you wanted to talk about?
I think there's interesting a lack of zoned greenfield land. That might sound odd, when you look around most centres, there's lots of greenfield properties, but not many of them are fully zoned and fully serviced. So a lot of that is restricting development in terms of the cost, the time, the risk, all that associated with it. So and any sites that are greenfield and zoned and ready to go, pretty tightly held. So it's an interesting market. And probably the third one is development finance. The fourth one, development finance. We're starting to see a move away from traditional banks to second tier lenders. We've seen it go very strong in Australia that way, and we're starting to see that come through in New Zealand as well.
Okay, cool. And I guess the final question to wrap up is, what are you kind of expecting to see in 2025? I know you mentioned more activity with those things easing back. But what are you looking forward to?
Look, I think interest rates are the key thing here. We've already started to see them come back down, and we're starting to see the effect for those, but it's how quickly that effect flows through the market. We've still got a lot of excess stock we've got to get rid of, and as soon as that goes away, we're going to start seeing development come back. I think it's about confidence, developers feeling that if they start developing today, they're going to be developing into a rising market. And I think there's more and more optimism around that's what's going to happen in 2025. And I think the other one is we're going to start seeing investors come back into the market.
Okay, and are you already starting to see kind of early signs of that?
I think we are, yes, yeah. Low interest rates, some anticipation that we're going to see price rises. This increase, they're being talked about around about 5%. That's the sort of thing that sort of encourages investors back in. And investors are important. They're a real key to pre-sales and getting development underway. So I think that the investor market being regenerated is a pretty important part of the market going forward.
Yeah, awesome. Well, thanks for joining us today, Gerald. It's pretty interesting to hear about what's going on and what's going to happen throughout this year. So thanks for joining us.
Okay, thank you.
And we'll catch you guys next time.